Welcome back to another episode of Unlocking Venture Capital. I'm here with Jordan Lue from Connecticut Innovations. How are you doing, Jordan?
I'm good, Sydney. How are you?
Good, good. I am so excited for this episode and really excited to have you on. So, Jordan, tell us a little bit about, for those who don't know Connecticut Innovations, what do you guys focus on? Obviously, you're based in Connecticut, so tell us about that.
Yeah. Well, you'd be shocked. Sometimes, even with the title Connecticut in the name, people don't assume that we're in Connecticut. But yeah, it's a very unique fund that I'm a part of. We are the state of Connecticut's venture capital arm, and so very uniquely, our only LP is the state of Connecticut. We started about 30 years ago. Actually, a little bit more than 30 years ago at this point, and started with bond funding, believe it or not, which we have since repaid. And with the profits of the investments that we had initially made, we have become self-sustaining since then. And so, for us, it's once again a unique approach to private, equities or startup funding, where our kind of job is obviously financial returns, but secondly, and actually right behind that is economic development. And so that was kind of the catch of the state giving us the capital initially to get us going was we'll allow you to kind of do these investments, but there needs to be an angle of economic development, and we judge that through jobs, believe it or not, which
Yeah.
is a little outdated, I'd say, maybe in this day and age, given the fact that remote work is a huge thing. Companies aren't necessarily going into offices anymore, although it is changing a little bit. And I'm curious to hear your thoughts on that as we
Yeah.
put this
Yeah.
conversation.
I
But
know that you are actually the first government fund that we're having on the podcast. So we'd
yeah,
love to get just kind of high level, so then our audience understands a little bit the difference between an institutional fund and a
of
government
course.
related fund, and kind of where you stand on your day to day. How does that affect your daily life?
Yeah, no, it's a fair question. I think the biggest difference outside of the fact that we're a government fund is that we're an evergreen fund, which is, unique, but not necessarily too unique within the market. There are some funds out there, institutional funds that, essentially circle their profits back to the next batch of founders. Obviously, a bit of those profits are used to keep the lights on, pay salaries, you know what I mean? Do the things that most businesses need to do to keep going. But for the most part, that's really where it's super unique in the sense of our perspective on investments are a little bit different than a fund looking to quote unquote return the fund and pay back
Yeah.
their LPs 10x, which don't get me wrong, we'll definitely take a 10x deal. But given the fact that we're more importantly, just as like I said, looking for good deals to flip our money, we're not here, this isn't, an impact fund or giving out grants, and there's no problems with that. That's just not our perspective. But secondary to that is just we look at deals from, okay, one, it's a quote unquote good deal in our eyes, but more importantly, what is it bringing to the state? And you can measure that in several different ways, but how we've kind of measured it over the last 30 plus years, and it's changed, and I can definitely get into that, is just how many jobs are being created or going to be growth within however many months since our investments. And so
Yeah.
yeah, I think that's our biggest difference, believe it or not. I would say as far as how it affects my day to day, once again, it's just, and I'm sure you've seen this before when we've been around in New York, walking around, when founders are talking to me, the first question I usually ask is, so what's your Connecticut angle? And if it's a no, it unfortunately may not be for us, but and it's good in the sense of we have a focus, which I think
Yeah.
all investors sooner or later end up putting blinders on to, in a sense, you know what I mean, and saying this is what we look for. So we're very much, on par with that. We have these blinders on in a sense, but we're also not ignorant of the fact that that limits the amount of deals that we can see, right? And so obviously there are more startups that are outside of Connecticut than there are in, but we're willing to turn over rocks that probably most people wouldn't. And we've seen it several times now. Companies that would be looked away by venture capitalists or traditional capitalists because they just don't look as quote unquote sexy as other prospects. And we
Yeah.
work with them, and the next thing you know, 5, 10 years later, they end up being huge success, sometimes bigger than the ones that these other VCs took bets on. And so yeah, it's not a foolproof plan, and there are some issues that we could definitely get into. But as far as, like I say, your question of how does it differ in my day to day, I work just like any other VC. We do diligence, we do customer calls, investor calls, everything else that most people do. We'll dive in there. But We just have this one kind of asterisk of what's the Connecticut play. But let me wrap up on this Connecticut Innovations. And so we invest in both life sciences and technology. I'd say probably lean more towards the life sciences given our relationship with Yale. Our headquarters is in New Haven. Yale is 5 minutes from us. But we also have presence in Hartford, Connecticut, as well as Stamford, where I am right now. I sit on the technology side, and we're a generalist fund, kind of going back to that point of like, we don't necessarily have the privilege of being able to pick and choose deals. We'll look at basically anything. And we have safeguards to make sure we're not just doing anything. We have experts come into our deals. We're cutting checks that are a little bit larger than normal to make sure that we're kind of sound. But, as far as check size goes, about 100K to about 2.5, 3 million. We have several different strategies. Our direct equity strategies, which is just obviously buying equity from these startups. We have our venture debt, just for later stage companies, and then we do a lot of fund-to-fund investing. And we'll invest in Connecticut GPs who can invest anywhere. Ideally, they do 1 or 2 Connecticut deals, but we don't make them have to do that. And so yeah, we have about 225 portfolio companies. They range from proof of concept, one person in a garage to 200, 300 plus employees, functioning, breathing corporation. So yeah, that's kind of our background.
That's really great. And you asked me before about what I'm seeing in the market, so I would love to talk a little bit about how you guys are allocating your resources towards LP investment versus direct investment, and if the state of the market has really changed. So in the family office side, I've actually had a few family office friends who have come onto the podcast as well. And, they are seeing an interesting kind of shift. So we do direct investments, and
Yes.
they are actually putting a lot more pressure on the fund managers to be like, okay, well, since we already have direct investment and it's taking a little bit longer now to see the return in terms of DPI, in terms of, for their funds. So they are shifting towards having more direct investments versus LP investments on the family office landscape right now, just because of where the interest rates are and where the money is going or not returning at the same rate that it used to. And
Yeah.
so I was wondering, how you guys decide on that kind of allocation and if this market has affected any of that.
Mm-hmm. Yeah, I mean, just to quickly touch on the first question of the split between direct and fund to fund. I mean, we'll put our hand up first and say we're not necessarily fund to fund investors. We do it because once again, it inspires and more importantly creates an ecosystem for our
Yeah.
entrepreneurs. There's a point in time, I've never been to San Francisco, it's on my list, but what I've heard is that, there are just tons of VCs within the Silicon Valley area, and that inspires entrepreneurs to really understand that, hey, if I build something, that there is capital out there. And so for
Yeah.
us, when we started this strategy, I think it was about 6 years ago, there was one, maybe two, Canaan was still is a massive one, and we're part of a couple of their funds. But there was not many others, and we're not saying that it's on us. And I think you've heard me speak about this before at one of the fund to fund panels that I was on. But we've put money into 16, 17 now different
Yeah.
GPs. And so in 6 years, part of it was COVID. We're not going to lie. People moving from New York, coming here, just moving in general back home and setting up shop, in Connecticut. But, now we've, at least in our database, have about 25, 26 different funds. Now, we're not part of every single one of them, but they're here in the state. And so as you as an entrepreneur, now you can say, if I build something, at the very least, there's some capital out there, or at least people to
Yeah.
talk to if things
Yeah.
go well, right? And so, yeah, I'd probably say 20% tops of our time is spent on fund to funds. It's not where we are more of a direct, equity investments. And so going back to your next question of how has the landscape changed our allocation? So we've been pretty steady. I mean, over the last 3 years since I've been here, spent about $50 million a year averaging out. And I talked to one of our, head MDs here, and he was like, at the end of the day, I said, hey, why don't we just, back off a little bit? It's cool. He's like, no, I mean, the good deals are happening now. Valuations are down.
Yeah.
Companies are still being made. This is the time to kind of put money in versus the 2021s of the world where, money was just flying out the door every single other day. And so, yeah, for us, it's a steady approach. Now we are not just throwing money at things. Now we're waiting for deals to come together, rounds to come together, where companies can raise a round that will last them 12 to 18 months. But, for us, it's just we're staying pretty steady given the fact that, believe it or not, the world is kind of going through some turmoil right now. Or more importantly, I think the better way to put it is just readjusting or coming back to form, right? And so, yeah, that's kind of how we're looking at it. But there's a privilege to that too, right? So part of it's just having the dry powder in order to continue to put that out, which is also another issue why most people are pulling back, is they just don't have the capital to do it.
Yeah,
So being
absolutely.
around for 30 years allow us to kind of, build up this war chest. And so we're able to kind of stay steady, with the hopes that in 5, 10 years, these deals that we do now will reap the benefits that, we had been there when it was a little bit harder.
Yeah. And you know what? Like it's so funny that you're saying and in terms of like people are this is the best time to invest. And so in Canada we invest in US and Canada, right? But in Canada we've always had like kind of value investing. And so
Mhm.
like value stocks versus growth stocks kind of a thing.
Yeah.
And we always like had a lot of trouble with US stocks because the valuation was so high. And so even at pre-seed, you would actually still
Oh
need to
yeah.
generate revenue and you would still need to actually generate a lot of demand and also have like a lead investor and everything in order to get funding in a lot of Canadian funds. And so that to us was just always normal. We didn't know that you had to
Right.
wait for a bad market for that to normalize in other countries. You know what I mean? I'm like, oh, okay. Well, I guess I am well prepared now.
You're very prepared. And part of it's just the herd mentality, and just FOMO is a huge thing. You don't want to be the one
Yeah.
who missed out on that deal. And so part of it's just, unfortunately, groupthink, and,
Yeah.
once again, going back to just FOMO, we don't want to miss. And so you'll put money into deals where the terms just aren't in your favor. But hey, they're growing at this much percentage year over year, month over month. Like, let's make sure this fund, who we know and who has a very good brand name, is a part of it. Let's not miss it, right? But I think people, to your point, are kind of going back to this value investing where it's just like, hold on, what are the terms? What are the economics of this deal first and foremost? Whereas the company truly, hence why people are looking a little bit harder at financial statements and cash flow and profitability. But yeah, I think that there's two sides to it, right? Because you want to make sure you're doing a good deal, but at the end of the day, this is a game of innovation, and the reality is it takes money to make money. And so, you can't expect companies to be this perfectly tied on a bow, looks great. You know what I mean? There is some part of it where it's like it's going to take some time for this thing to actually work. And so, you know, that's where I think the balance of valuation, especially from the founder's perspective, is this thing is going to take time to grow, but when it is there, it's going to be big. And then investors like, yeah, but it may be big, but it's not there now. And so there's that balance of figuring out where should we land then, and hence why the safes and even notes to an extent are a
Yeah.
good happy medium. But even then, you'll see some crazy caps on there and whatnot. So I totally get it.
For sure. And you know what? Like, back to what you were saying before that your typical day is like any other institutional investor just because you work at a government run fund. And I was like, I don't think that's true. You're the only person I know who has to cross state lines several times a week, all the time. That is like insane. Like you go so far and vast and wide to find the best deal.
Oh
And so,
yeah.
how does that really kind of affect your views on how things are running in your mind? And because you're every time you cross, it's also like different kinds of deals and different kinds of valuations, even
Mhm.
though it seems very close by, it's really not.
No, no, no. It's yeah, and part of it is to find the best deals, right? And but a lot of times for me is, and that's how we met, right? Is I find people who either co-investors or just other stakeholders in the ecosystem that can help
Yeah,
what we have here in Connecticut. So if I get the less, believe it or not, I go there with, if I find a deal or find someone who has someone in Connecticut by chance, great. But my perspective usually is increasing the network from the side of, hey, we find a deal in Connecticut. I know your thesis, you know what I mean? Although you're in Canada, but you do look at US deals. Let me send this to you and see if you're interested in it. And now we have a round coming together, right? And so part of it is just more network expansion, and, then being able to, one, obviously meet cool people like yourself, but more importantly, when a deal kind of comes together and I know your thesis and I think that it fits what you're looking for, I send it on over to you. So you'd be surprised how many people that I've met. I go in like, hey, how many investors can I actually befriend, and just make sure that we're connected on LinkedIn or have each other's emails. It's more so for when we do find deals that are good or may fit a thesis that yeah, we can get to working together. But you make a good point. There's also the times where I will find a company, believe it or not. I found a couple that have a presence or an office in New York, but CEO or CFO lives in Connecticut and does the reverse commute every single day. And we
yeah,
kind of count it as economic development because they could probably hire people around them. you've seen that a couple times now, actually, within the last year of companies having a good presence in New York, but C-suite in Connecticut, and then they build out two or three others and have a smaller secondary office here. So that counts for us, right? And so that happens as well. But for me, it was just to be completely transparent. It's, I don't go in there holding my breath for that. It's more about meeting co-investors or other stakeholders in the ecosystem that could potentially help, what we've got going on here.
Yeah, I think one of the great examples is one of your portfolio companies, 2084, which is really great as a part of a great diversity initiative that I would love to learn more about that Connecticut
Yeah.
Innovations is doing. And also the second thing is like, because they were a co-working space and they did have connections to Connecticut, which is really great. I think that they also fall along the lines of why some people might be confused, like the whole
Yeah.
WeWork thing. Why would a co-working space, be something that you would invest in because there's spaces that you're not looking at? And then
Yeah.
also, what is the scalability that you guys are seeing or testing for in terms of a KPI? Because you
Yeah.
can't use the same kind of tech KPIs and
Yeah.
performance trackers
No
to
way.
test for the same things. So, how did that kind of come about? And it was also so great to see you physically be there for them during their
Yeah.
events. And of
Yeah.
course, thank you for inviting me. It was a really great event
Yeah.
to have there in New York as well.
Yeah, yeah. So yeah, 2045 is an interesting story. So we met them through an exited founder who was also in Connecticut, Andre Swanson. I just saw him yesterday. We're
Amazing.
diligencing him on a different deal, but he exited for us. Really, really great outcome for everyone, including himself. But he had met, there's very few African American founders who have such large exits, and so when they happen, you end up being kind of I don't not a black sheep, but you're just different.
Yeah.
And so
And
deals come to you, and you're connected. You're very much connected now at that point. And he knew Porter, who's obviously the CEO of 2045, and they had come together a couple times. And he had his own company at the time, Jopwell, which is large within itself, which he has recently sold, believe it or not. But he was coming out with this new idea of 2045, and yeah, there is the arm, the part that you love honing in on is the co-working space, but really it's actually a software play,
okay.
and it's kind of getting that way, but it started off as just this concept of you know there are leaders that are coming about by 2045. The minority in America is going to be the majority, believe it or not. How do we cultivate in the 20 years until then, leaders that will be in the C-suite by that time, so that these corporations are better positioned to handle their customers and their customer base and what they're looking for. And so he created this concept, and it's very similar to like YPO, or like the World Economic Forum as well, as kind of a version of it, where it's like you're just bringing together influential people, and then their kind of business model is charging the corporations to once again provide this executive coaching essentially to their leaders that they're hoping to be around for a very long time. And so yeah, very interesting company. It's done well. It's doing well. New York are now signed on with them, and it's only their first years. Actually, September was their first event last year, and so they're making progress. It's been an interesting ride so far, but we've learned, as I mentioned, it's interesting. I'm always shocked by who has some type of Connecticut presence, and he had moved to Connecticut, Porter, probably a year before we ended up doing the deal, and so we had no idea he existed. It took another founder telling us about it, but you'd be shocked about the amount of people who, and it's been like a thing for years now. It's not just a recent thing where you kind of quote unquote make your money in New York, and then when it's time to have a family or you want some more space, or you're kind of over the New York living, you go hop over to Connecticut. You're still close enough, you know what I mean, to hop on the train and get back in when necessary, but for the most part, it's good schools here, good kind of lifestyle, and very interesting people that, believe it
Yeah.
or not, I
And they
think
can
that
follow you to the next polo match.
there you go, which should be happening soon, I think. So,
Good. I hope your team
yeah.
wins.
Exactly. But yeah, so that's kind of how that came about. And like I said, it's I'm shocked every single time when I find these founders in the area, and for them it's usually like a pretty obvious yes when it comes to us kind of coming in, because we have connections that span pretty deeply within just the state, and we know tons of other investors. We know, potential corporate partners. We know government officials. So there's a value add outside of the dollars that we bring, and so it's always good to kind of have these conversations with these kind of rock star
Yeah.
founders.
And actually, like, to your point also, like having a referral from an exited founder or a high profile founder is
Right.
far more valuable than from like probably other investors. And so,
100%.
yeah. And
100%.
like, yeah, because they have so much proof. For you and I, it's always actually really hard to prove what we're doing or explain to other people if you were like explaining in a different language or something, right?
Yeah.
And it's really difficult. But for like someone like Andre, your friend, it's
Gets it.
very clear what he's great at.
Yeah, exactly. He
Just like
gets it.
the way that you say, oh yeah, he's probably actually just sold another company. You make it sound like he just like went to the gym. Like that's just like a hobby, just
Right,
something that
right. That's
people
a
do.
very hard thing to do. It's a
It's
very
a
hard
really
thing
hard thing to
to
do. And so,
do.
it means the world for either both investors as well as startups to get referrals from these really high profile
Yes,
founders that have really paved the way for a lot of other people.
exactly.
So I think it's
Exactly.
really great that you guys have this connection. And also just would love to understand a little bit more about like, why why Connecticut Innovations came out with this diversity initiative and what that vision kind of looks like in the near future.
Yeah, so we were given some dollars. So as I mentioned, we're not necessarily on the annual budget. So for the state, we are self-sustaining. We have kind of our own war chest that we've built up. But every once in a while, the state will give us some additional dollars. And the recent SSBCI dollars that all states got kind of post-COVID. It was kind of their COVID recovery dollars that the federal government granted. Was passed from Connecticut onto the Department of Economic Development. And we're under that kind of department technically, and they chose us to be the entity to kind of disperse this money. And not the first time this has happened, but it's happened in our past before. And so we've kind of proven that we're able to do this. So when it came again, it was a pretty, obvious decision for us. And so that was $120 million that we received. We earmarked a good amount of that, or a decent amount of it, towards venture debt. We put 100, towards climate tech, and then we put 50 towards this what we call the Future Fund, but it's diverse founders, women founders, underrepresented founders, however you label it. And so if you did the math real quickly, that's a little bit more than 120. So we've kind of matched kind of the funds that we've received a little bit to it, so that we were able to give a little bit of dollars from our own balance sheet, but also take in the 120 from
There
the
wasn't
federal.
like a specific target goal of the number of investments you were
No,
looking for in a
no,
particular thing.
no. I
Okay.
mean, it's we're obviously audited and asked to explain what decisions we've made, and
Right.
it's a very thorough process. We have a whole entire process team that just works on this 24/7, believe it or not. But yeah, it's interesting. But no, so the whole concept was that, so we have $100 million for climate tech, so they're doing their thing there. Constantine and Drew, they're doing it very well. But this team that we have is also focused on the Future Fund, which
Okay.
is very cool. And it's funny enough because we've been doing a couple of these deals prior to it, but the whole thesis was that, going back to 2045's thesis, is that this is where the world's going. Like,
Yeah, it's
you
where the
could be
world's
in
going.
denial all you want. You could be in
Yeah.
denial all you want. It may not be here today. We're seeing the big pushback of DEI. I get it, and we can have a whole discussion on that. But the reality is the numbers aren't changing. The
I,
world, the U.S. So
I
just
know.
talk about the U.S. The U.S. is pushing towards this, and so to not think that this is a good financial opportunity, I think we'll be pretty remiss. Now, I think the question should be more about, is their approach right? Is how, is this group ready for, venture funding? Or should it be a little bit more upstream? Should it be more downstream? I think that's more about, kind of where the questions are. But just in general, is looking at it very similarly to climate tech. It's an opportunity. And so we look at it as an opportunity. And the whole concept was that, yeah, well, we were already putting money into women founders. Obviously, Andre is an African American founder. Porter is as well. So we were already doing it, but now we have these funds that are kind of allocated and be able to say,
Yeah.
like, this is what we're doing it towards. And so, yeah, look, it's an evolving kind of thesis. You know, we've done several deals since in the past 2 years on with this funding. Just closed another one this week. So it's money is moving, and it's very good experience to kind of see it happen. But as far as your question of just why, it's just we saw it as a financial opportunity, and there's several private funds who are thinking the exact same way. It's kind of once again unfortunate to see the downfall of DEI, quote unquote, and I get why. I'm not ignorant to why it's the way it is right now. You can't necessarily point to profitability, quote unquote, but I do believe that there is an opportunity there, and I'm a little biased, obviously, given the fact that I'm from this representation, this marginalized group. But at the same time, it's just it's in my opinion, we'd be doing it wrong if we weren't setting ourselves up to
Yeah.
better this
And I
community.
also think that, the fact that you set up a fund that is branded that way and that is, that you're very clear in these initiatives, it is out there, it then attracts the founders that
You know,
wouldn't know otherwise, right? And,
exactly,
and I think that that's
exactly.
really also very different too, because that's
Yeah.
not something that all government funds or any other fund would normally have. Just because
At
they
all.
say that they're open, it doesn't really mean that they're really attracting all of the
Yeah,
spectrum of people and all the different
exactly.
kinds of initiatives that could be out there.
Exactly. Exactly.
I know that one of the other trends, one last thing to ask you is like one of the other trends is that, younger people and people that are new grads or even young associates, analysts in our field or startups are looking to be, new LPs or new investors in other funds or in investments, especially with funds because it's so much more not transparent, I would say. What kind of advice would you give a first time investor who's looking to provide investment for the first time? And I'll tell you what I told somebody recently as well.
Okay. You want me to go first, or are you going to tell me, or are you going to say it first?
Oh, mine's gonna be a mic drop. I'll let you go first.
Okay. So essentially the question being, so how would I advise on someone
Yeah,
investing
if
in
you were to give
a
them a
fund?
piece of advice that they can like really hone in on.
Yeah, on the fund side, it depends. So if you're going after emerging fund managers, then the track record part is tough, and it's kind
Yeah.
of like it's unfortunate, because once again, going back to it takes
So
money to
your
make.
advice is don't look at emerging fund managers.
No, that's not my advice. I'm just saying it's disadvantage. It's honestly, it's a disadvantage if you're an emerging fund manager, but that's part of the game. And all these funds at one point were emerging fund managers. So how bad do you want it is kind of how I look at it. But more importantly is, I mean, the cheat is just hopefully you go after one that's a little bit later and has attraction. So you
Okay,
can
there
talk
you
to
go.
founders, you could talk to their LPs, so you can
Great.
go to their LP events and just understand their culture, see their past memos, see their potential exits, or more importantly their failures, right, and how they explain their failures and why it may happen. So that's the obvious thing. I mean, let's just be honest, right? And so it's similar here. You probably prefer someone who's done it before, but
I love that.
you may not have the ability to get into those LP deals, or just don't know anybody. And so the other way is to obviously analyze their thesis, analyze how they are going to get deal flow or how they've gotten deal flow,
Yeah.
and once again, ideally that they've done some type of work in this space already. So maybe they were at a different fund prior, or they were doing some own of their angel investing. And just once again, you're trying to just get a clarity on how they approach their investments, how they're communicating their investments. That's really important because at the end of the day, this is a gambling game, and they're probably going
Yeah.
to lose on
Yeah.
7 out of the 10
I love
deals
that
that
you really are honing in on like what is your risk analysis strategy versus
exactly.
like just the mission that they put on
Yeah.
the site because that could be anything.
Anything, anything, right? And that's what I'm trying to get at is you kind of got to look a little bit deeper. But once again, it's unfortunate because similar to if you had to get life-saving surgery, you'd prefer to get somebody who's done it before. Let's just be real. But at the end of the day, the person who was doing that life-saving surgery had to do
Yeah.
their first surgery at one point in their life too. So it's like part of it then is just more approaching who they are as a person and
Yeah.
capabilities of learning in the
Yeah.
past and how people kind of feel their energy prior to you meeting them. And so a lot of it comes down to psychology and just your ability to read the person, which isn't easy, but there is ways to find tangible things that can point to their character and their ability. And so that's kind of easier said than done, but that's how I would approach it if I was looking at an investment. But I'm curious to hear hear your thoughts on this.
Yeah, so I volunteered to be an investor judge for this like $1 million pitch very recently.
Oh,
And
nice.
so one of the observers was a new angel investor. He is in the NFL. And
Hmm.
so he was like, so he signed obviously a huge contract, comes from a very different place than the example I had just given. But
Yeah.
um, but then he was like, okay, so I've angel invested in this and this, and because like, I guess I know sports, I have done these kinds of things, and I'm like, okay, what do you want to see in the world in the next like 5 years or
Mm,
so? And so just start there. So I feel like kind of getting them to have a bit more blinders on by
yeah,
being like, okay, instead of having everybody give things to you, what are
right.
you looking for? And
Exactly.
therefore, because he has a bigger platform, because he has more resources than I would say
Of
somebody who's just like a new grad or starting out kind of
course.
a thing
Of
because
course.
he signed big contracts.
Yeah.
Kind of see you actually have the power to move the needle in that way. And
Yeah.
that is huge, right? Like how Magic Johnson did it, with
Yeah.
all of creating all of these communities and urban
Yeah. Of
neighborhoods that he wouldn't have been able to do without
course.
this huge platform, without this huge
Of
name and this
course.
backbone
Of
to
course.
do everything.
Yeah.
And so I was like, okay, well, if you wanted to start there, what kind of things inspire you? What kind of things do you fear?
Of
And
course.
and so having that, I think, gave him a lot more. And I was like, you can write it down if you want. You can send it to me. We can review it together.
Yeah.
Yeah, because other than just introducing him to a sports fund or a family office fund that very much specializes in sports, both of which I know in my network, is
Mhm.
not particularly helpful to him if
Yeah.
that is not what he wants to see kind of further on.
Of course.
And so he was like, "This is a really good question. I don't know. I got to go think about it some more."
No, I mean, and it goes back to the point we were making earlier is about Connecticut and just our focus on Connecticut. But just in general, most funds sooner or later put blinders on, whether you want
Yeah,
to admit it or not. You know what I
I
mean? It
know.
limits your options, and rightfully so. I don't know if you've ever been, I'm sure, like on the toothpaste aisle, and there's just so many options. And if you don't know what you're looking for or what your preferences are, you could be sitting there looking at every single one. And to
Every
your
single
point, is
thing.
that you got to
Yeah,
put some
that's a great
blinders on. I'm
example.
looking for non-fluoride, like it has a twist off cap, you know what I mean? And then it boils it down to one or two things. And so
Yeah,
very similarly to that is it actually helps because the whole paralysis by analysis is a real thing, you know what I
yes,
mean? And
yeah.
having
I've
too many
actually like
options is actually very hard.
for sure. I've gone to like bodegas where I thought I was gonna go get something, and then I was overwhelmed by decisions that I like walked backwards, like that
Like,
Homer. Like, no, I can't do this. It's overwhelming.
it is so
Yeah,
funny.
that's definitely happened. I think that's really great advice that you've given to new
Yeah.
investors that are looking to join in the space and be able to participate and have a voice.
No,
Uh,
and you know what? I like your advice too because it's authenticity. At the end of the day, you're gonna lose on probably majority of the deals you end up doing, or
that's
even
what
the
we want to
fund
hear.
who you invest
Yeah,
in, they're gonna lose. And so part of it is just like how much did I care and I believed and I wanted genuinely felt like this was kind of true to me. And so
yeah,
I think it gives you a little bit more of an okay when things go left, when it's like this was authentically what I wanted anyways. And so I'm okay with the failure in that sense. Whereas if you're doing things that you're just doing because you felt like it was the right thing or someone else told you to do it or other people were doing it,
yeah.
fine, things may work out, but when it doesn't, you're just like, you're gonna have this sense of regret, like, why?
Sure.
This is not what I wanted to do in the first place. No, there's so I just, high level love what your perspective on was it too, because that's true. There needs to be some sense of like genuineness and authenticity within your thesis, because the reality is you're probably gonna lose on most of the things.
Yeah.
If it's investments or if it's in a fund, they're going to lose on a good amount of their bets. But the hope is that they find one or two, and the more authentic it is, I believe, the better it will be in the long term.
I think so. I think that the stats in the future will be on our side to hopefully do better.
Yeah.
Um, so thank you everyone for joining us on another episode of Unlocking Venture Capital. I'm here with my good friend Jordan. Thank you so much for coming on.
Thank you for having me, Sydney. This was awesome.